Here it is right now, 8:48 a.m. going into the lunch hour, and look at that, 12.20 by 13.20, 28.80 the close, 29.40 the high, 12.10 is that bid now. Yes, we do have orders down there at 11.70, but we're going to move them in around. I'm going to pull it back from the 10.90. I'm going to pull this bid into 10.80 right now. Once again, 27.75 put. Here it is. 2777 all the way across, dot 38, 22.11 breakout, which has taken this price level down to wholesale entries for those who don't understand. And the thing about it is that markets have both, as the rallies continue to go higher, starting today, which is 4/2 of 2012. The put side will start out on a Monday once again at the lower level of our wholesale pricing channels. And we will also be watching our charts right here. And we can take a look here if this is correct and updated. We can see right here that it's breaking higher right now. And as that's breaking higher, and it's a Nasdaq 100, and it's an MMT app now. Look at the ascending diamond breakouts, how nice. So that call side that we were getting into is going higher. And as the call side is going higher, look at that lower bid level that I talked about. And I talked about that a couple hours ago. So the markdown, when we do make an engagement as a market maker at the lowest end, you take 14.30 being the low, and you got to take that dollar ratio. So 12.30 would be 200 pennies below the low on that entry, and that would be based on the Nasdaq 100 NDX, and that's what this is. This thing is strong, and it looks like, let's see if I'm getting the right data. Nope, I'm not populating. I'm populating the inside number. Let's see. There you go.
We get into our 420 on 605.
What do you have on the high? I have 2778.77.
It's Apple 610 put. You have
Okay.
5 contracts at 420.
All right.
Okay, it's 440 by 450.
All right, we're breaking higher. Cancel that put option. Pull that in at 2.80 in case we break back up above the 617.50, which is the next major resistance level on Apple. So back to the Nasdaq 100 breakout. Once again, stealing the lowest bid. Discount entry as a market maker is the king of the wholesale bid, and then selling it back to the public. That's what we do. And it's all based on directional movement. And the Dow's breaking out back above there. So yes, everything's working your way. Cancel that 440, limit that order. There's a fair bid right about 320. So let's take the limit order to 320 until we see a reversal in the Apple trade. Okay? And finally, once again, how to steal this side of the market at resistance or near resistance at the money. Weekly, 4/5/2012, 27.75 put. And there's
Google
the
also
Nasdaq
breaking
100.
out.
All right, Google's on a breakout in a chair, I'm hearing. There is the low print. And I can say, based on the current resistance levels and the amount of starting the new trading quarter out here at the MMT school, is that we can clearly see how they're starting April off on the first trading day, the bull. And that last week when the markets had reversals and whatnot, the put side had paid, and then the call side, that side was the winning trades today. So, and we have lots of them. But now the put sides are getting cheap, and we have an MMT who got hit at $11 on that Nasdaq 100. Here it is. 8:59 a.m. Pacific Standard Time. 13 of them traded, but they all were buying up at the highs. Look at the price prints. 1620, 1449, 1466, 1430, and then the MMT just bought exactly what she's taught to do. And that is buy. So her risk entry at $11, she took out on just that one contract to start with, live, here and now. Let it be the truth that when you're going to learn how to be a market maker on a weekly level and a monthly level, doesn't matter which level, but when you're going to work the weeklies, because that's what the price premium is, she's hit, yeah, it's 1130 by 1220. That's the bid and ask. She could jump over there at $12 if she wanted. And that's on the Nasdaq 100 right here. Okay? And so basically that entry, which is done live right now, and it's exactly 12 o'clock Eastern Time, 4/2/2012, first print of the low of the day. Let it go on the record. And it is $11. Yes, there's always risk, but you can come out of it because of the low print. You have removed the risk. You're not buying at 25. You didn't own it at $35 a contract, even though they've only been open 2 days. Okay? The markdown of 1780 put that at a wholesale bid. And the ratio entry 1430, you do the math. That's $3.30. Okay? Wholesale. Below the print. And that's how it got hit. And now there's a market, and there will be within that print, because you can always do one of two things. Is when the Nasdaq 100 has to reverse for this to pay, and it's lunch hour, and it's easy to drop the bid. It is. They're only $1 wide. They're 100 pennies wide. So you're in at $11. You can always go out at 11.30, and someone would lift you, and then put your bid lower below the market and go for the secondary transaction, should that be the case. And once again, on that Nasdaq 100, we just want to be aware of the fact what the resistance levels are in the NDX 100 when you're getting a wholesale, and you can always have a way of getting out based on the wholesale entries.